shadows behind the first bank run. It began with a whisper, soft, uncertain, almost dismissible, a rumor drifting through narrow streets, slipping into taverns and counting rooms, carried by anxious voices that did not yet understand the weight of what they were repeating. But whispers in London have a way of gathering force, and this one would soon swell into a tide that no institution could withstand. The city was entering an age of experimentation. Banks were young, their authority fragile, their promises still untested. They offered something revolutionary, the ability to store wealth as paper rather than metal. Convenience, safety, speed. Yet beneath this elegant idea lay a truth few wanted to confront. Paper survived only as long as trust held firm. That is why this moment mattered. To understand how London became the financial giant it is today, we must return to a time when the system was so delicate that a single rumor could unmake it. A time when the public had not yet learned to distinguish risk from panic. And institutions had not yet learned that confidence was their most valuable currency. At first, the shift felt minor. A merchant complained that his withdrawal had been delayed. A moneylender whispered that reserves were thinner than expected. A ship captain, waiting for funds to settle his crew, muttered that something felt wrong. These were scattered anxieties, each too small to draw alarm. But together, they formed the outline of fear that would soon grip the city. The reveal began when crowds gathered outside one of London's most ambitious early banks. People arrived hoping for reassurance, yet the sight of others waiting only deepened their doubt. Faces grew tense, lines thickened, and the rumor transformed into certainty. The bank did not have enough coin to honor its promises. London was about to learn a devastating truth, that confidence can vanish faster than any treasure, and that once fear takes root, it spreads with unstoppable force. The line outside the bank grew longer with every passing hour. What began as a handful of anxious depositors soon swelled into a crowd that clogged a narrow street, each person driven by the same fear. If they didn't withdraw their money now, there might be nothing left to claim. Panic fed on itself. Every hurried step, every raised voice, every impatient gesture confirmed the suspicion that something was terribly wrong. Inside the bank, clerks struggled to maintain composure. They counted coin with shaking hands, repeating reassurances they no longer fully believed. Each payout thinned the reserves. Each thinned reserve sharpened the danger. The institution, once admired for its bold innovations, now felt like a fragile shell holding back a storm it had unknowingly invited. As word spread, the tension pierced through every layer of London's commercial world. Merchants paused mid-transaction. Lenders recalculated their risks. Shopkeepers debated whether to accept the bank's notes at all. Confidence, once abundant, evaporated with frightening speed. Even those who trusted the system felt compelled to act out of self-preservation. Fear made rational men behave like they were fleeing a fire. But beneath the surface, a deeper conflict was stirring, one that divided the city's emerging financial thinkers. Some blamed the bank, arguing it stretched itself too far, issuing notes without sufficient metal to back them. Others insisted the real danger came from the public's reaction, not the bank's practices. If people had simply remained calm, the institution would have survived. This clash revealed a truth London had not yet learned. Fragility does not always come from weakness, but from perception. The pressure intensified when rival moneylenders joined the fray. Some encouraged the panic quietly, hoping to weaken a competitor. Others offered to exchange banknotes at steep discounts, turning fear into opportunity. Their actions blurred the line between assistance and exploitation, raising questions about loyalty and ethics within a system still fighting to define itself. Even officials were divided. Some urged restraint, warning that intervention could signal weakness. Others pushed for immediate action, fearing that inaction would allow the crisis to spread. Meanwhile, the crowd outside the bank continued to swell, their urgency amplified by rumors that moved faster than any messenger. And yet, the most dangerous truth of all hovered unspoken. No bank, no matter how well run, could withstand a stampede of fear. If every depositor demanded their money at once, collapse was inevitable. Panic had rewritten the rules, and London was now racing toward a reckoning that would expose the vulnerabilities of its young financial system. The city stood at the edge of a breaking point. The question was no longer whether the bank would fall, but how far the damage would reach when it did. The panic that gripped the crowd outside the bank spread through London like contagion. Markets that had begun the morning in calm routine now hummed with unease. Traders who once boasted about their confidence in the new banking system suddenly hesitated. Every whispered rumor felt like a spark. Every delayed payment felt like proof. The city moved as though walking across a floor that might give way at any moment. Inside the bank, the situation worsened with alarming speed. Clerks worked until their fingers cramped, sliding coin after coin across the counter in a desperate attempt to maintain order. The reserve shrank into a pitiful stack, each payout pulling the institution closer to collapse. Managers attempted to reassure the waiting crowd, yet the strain in their voices betrayed them. Every attempt to calm the public had the opposite effect. People saw fear in their eyes, not confidence. Tension between merchants and financiers erupted into open conflict. Merchants, furious that the notes they relied upon were losing credibility by the hour, accused bankers of deceit and recklessness. Bankers defended themselves with equal fervor, insisting that no system could withstand a sudden rush sparked by rumors, not facts. The two sides hurled accusations across counting rooms, each convinced they were witnessing betrayal by the other. Into this chaos stepped the city's wealthiest private lenders, men whose fortunes could steady the institution if they chose. But the question of whether to intervene exposed a fracture between them. Some argued that supporting the bank would stabilize London's entire financial ecosystem. Others, more calculating, saw a chance to let a rival fall and seize its business in the aftermath. Their hesitation tightened the vice around the failing institution. As hours dragged into a day, the bank's collapse felt inevitable. The once confident flow of withdrawals became a frantic scramble as word spread that reserves were nearly gone. Crowds surged toward the doors. Arguments erupted. A scuffle broke out near the entrance, the tension finally spilling into physical desperation. Officials attempted to maintain order, but the panic had become too large to contain. The fear spilled into the city at large. Shops refused banknotes. Contracts were suspended. Wagon drivers demanded payment in metal before accepting goods. The banking system, still in its infancy, trembled beneath the pressure. If one institution fell, others might follow. If others followed, the foundations of London's financial experiment could crumble entirely. Amid the chaos, one question echoed with increasing force. Could paper ever be trusted as much as metal? Had the city moved too quickly into a world built on promises? Or was this crisis simply revealing the growing pains of an idea that would eventually reshape the world? As dusk settled over London, the crowd outside the bank waited for the final outcome, their breath held in a single, collective tension. The moment of collapse hovered close, so close that all that remained was to see how deeply the shock would cut. The collapse arrived not with an explosion, but with a quiet announcement spoken through a doorway barely wide enough for a crowd to see. The bank was suspending payments. No more withdrawals. No more notes redeemed. The reserves were gone. For a moment, the crowd fell into stunned silence. Then the uproar began. Shouts filled the street. Some demanded answers. Others pleaded. Many simply stood frozen, watching their savings vanish in the span of a heartbeat. The shock rippled outward. Merchants canceled shipments. Lenders tightened their terms overnight. Paper that had been treated as good as metal only days earlier now struggled to find acceptance anywhere in the city. A sense of betrayal settled over London, heavy and disorienting. People who had embraced the promise of modern banking now questioned everything it represented. Trust, once broken, left deep and painful scars. Yet amid the turmoil, a crucial realization emerged. The crisis had revealed not only the fragility of early banks, but the necessity of a stronger foundation. London could no longer depend on institutions built on enthusiasm alone. It needed structure, oversight, and mechanisms to prevent panic from dictating destiny. The public outrage that followed the collapse forced lawmakers, merchants, and financiers into an uncomfortable but unavoidable conversation. How could the system be rebuilt in a way that could withstand the fear that had just undone it? Solutions began to take shape. New frameworks for reserves were proposed. Regulations to limit the overissuance of notes gained support. Some called for a central authority to guide monetary stability. arguing that no individual bank could shoulder the responsibility alone. What had been seen as a reckless experiment only days earlier now appeared as a starting point for something far more resilient. The resolution did not erase the losses, but sparked transformation. London emerged from the crisis chastened yet wiser. The city learned that banking was not simply a matter of issuing notes. It was a craft built on managing confidence, preparing for uncertainty, and creating systems that could absorb fear rather than amplify it. The shadows behind the first bank run had revealed truths the city had been unprepared to face. And from those truths, London began constructing the sturdy architecture of modern finance, anchored not only in wealth, but in the understanding that trust must be earned, protected, and constantly renewed. Subscribe to join the journey.